Hello friends from the inner circle and welcome to a new video over here where we are going to make some educational stuff. So I would like to present you on a nice example, the way on how we trade. So it is kind of a textbook example for the Frankfurt and the London session on how we enter, plus something important on the market structure. So I know at the end it's like the market structure where the majority has their problems, because is it right now valid for me to take an entry? Is it now valid for me to consider this as the right POI? And this is where I would like to go more into the depth into this video, because we had recently a very nice and beautiful trade example over here. Also, what I would like to show you is how we use the timing. So everybody should know it already, but I'm trying to give you as much as possible examples over here. So this is why also me personally I'm backtesting very often, because this is the way on how I'm getting better as well. Because at the end there are just a few examples, if we are all honest to each other. There are not too many possibilities within this market, but it's just super complicated sometimes to find them, to interpret them the right way, and this is why we will make failures. It's because we're normal humans, so we cannot be like robots and make it every time perfect. I mean, not even robots can make it, because the markets are super crazy manipulated, of course, and this can change from day to day. And this is why, yeah, you cannot have 100% win rate or something. It's nothing what we are trying to get. We just understand that there are losses, which we will do, and we just we accept them. And that's our biggest advantage at the end, because people just trying to look for something, okay, it needs to be 100% right, or they think when they take a loser that it's their fault. But sometimes it's just a strategy, you know. I mean, of course it is in most of the cases the personal issue, because also for me, if I'm just reflecting all my failures, 99% is because of I just missed a hidden detail, and probably just 1% is where I would say, okay, now it should have been working out, but it didn't at the end. And when you will experience a phase like that, then it is because of the market is in a different situation. Like we're experiencing it right now on the Euro USD, it's kind of different. So you've seen me not being too active in Discord the last couple of days. It's because of the matter of fact, I didn't really have a clean clue about what market is doing. So I just tried myself to not put in a position trying to just get trades after trades involved and losing it trade after trade. So I just decided to, yeah, just chill a little bit. Don't take it too serious at that moment. Just to miss out on trades and just trying to backtest it and live testing at that time, so I can learn out of this new situation. And this is what I recommend to everybody, because we will always have these kind of situations in the market when it's just not clean, you know, and it's just stupid to try to get involved just because you think of, okay, it's a new day, I need to get involved in a new trade. No, you don't. A no trade is also a trade, because it will protect you for unnecessary losses at the end. And if you're not feeling comfortable, if you just say, okay, I have really no clue what price is doing, don't risk that money. I mean, you can reduce your risk anytime, it's possible, but probably it's just the best to just say, you know what, I will take off for that day. That's what I did the last couple of days. This is why I was not that active and so on. And to be honest, I'm just right now completely refilled with energy, and I'm just crazy motivated for tomorrow. And I just want to give you right now the same motivation to you, that whenever you are in a situation like this where you don't know the 100% what price will do, you know what, just don't take it, and that will be the best trade for you at the end. So don't forget about that, because just imagine you will still take that trade just because you think you need to make very fast money, and you will end up losing 5 trades. Now that will be minus 5R. If I will not take it, that would be for me plus 5R, because I saved the 5 losses, you know. So still, a 5R trade is a very good one. So don't forget that one. And probably on the 5-hour you need to pay a lot of commissions, you know, probably you just take a little bit too bigger stop loss and so on. And probably 5-hour in reality are 7-hour or even 8-hour, or in the extreme even 10-hour, you know. And this is like a super great trade. And if I just say, yo, no, I will not take it because I know price is currently not too good for me, and that's it. Okay, so that's kind of the first topic that I wanted to talk about in this video. Second one will be cryptocurrencies. Super important is because right now the cryptocurrencies are super highly manipulated. You know, it's like we are right now in that one bearish cycle. You know, in 2022 it was from the start clear that this will be a bearish bull run. So I just mentioned that many times on my YouTube channels. Right now in the last video, can check it out as well, my friends, if you want, because it's super educational one. This is currently also affecting the Euro USD, because the real factor here that we need to look are the factor that we really need to check out is the dollar index. And the dollar index is correlated with the whole forex market at the end. Whenever the dollar will increase in value, in this case, you know, the euro will lose in value, so the Euro USD is dropping down. And now, because I expect on Bitcoin just one more shakeout, so from my point of view, we will just see one more shakeout. I don't know right now if it will come now, you know, so for everybody who's interested in my view of Bitcoin, what kind of analysis I have there. Well, I have this cycle analysis in the first place, and I expect your price to come into this demand zone. You know, that's what I'm expecting. So 20,000 is the goal. Now, that doesn't mean the price will just go straight from here down. It could right now easily, you know, close now like this, be in this bearish range, okay, and then drop one more time, just a spike, and then coming up higher. That could be an option, which looks super realistic to me. That would mean right now for us on the Euro, you see the same kind of approach. We may see right now price pushing up higher before dropping down afterwards lower. But this bearish movement on the Euro USD doesn't need to be that strong, because the way on how much a price will move to the downside will be always different from asset to asset. And this is why we have different trends, and we're still correlated with just one factor, okay? Here, this is how I'm viewing it. So I want to see price dropping down lower till this area, potentially even coming down that much. I just don't think that, but it could be. I just feel that this weekly demand is so super realistic. This is the monthly demand, but yeah, it doesn't need to come all the way back down from my point of view. Okay, so it's interesting because that will help us now also on the Euro USD to understand some more things. Okay, then I would say I'm just going to show you here some nice example that we had. And for this example, everything I need is just the M15 time frame. Okay, you need to understand the M15 is for us the one that we should follow. So that means, just showing you right now something important, and hopefully you take here a little bit notes, or you're watching this video probably one more time, is that you should always follow the M15 order flow, which means if price is currently here, it's telling us, okay, we are in this range. Okay, so price now from here, because of it broke structure, gave us your BOS, it means it can go like this, go like that, drop down, and then starting pushing. Okay, now this is the lag, right? Now what you can do is that you understand, okay, we have a supply here. You got M15 supply, for instance, and M15 is switching like this. It's moving like this, and you got a BOS. This is your BOS. This is the substructure right now because this is your swing structure. This will give you right now extra confluence that you go with the supply zone. You're following current M15 substructure. You know, that's the substructure that you're following here. And this is what you need to follow. Of course, you should be in the overall lag, in the swing structure. This is why you want to go on the long term, because if you will right now rock it like this, you know that at this demand zone you will need to change your bias. You need to change it. You need to understand that price has a high chance, a nice chance to reverse. Let me just make that bigger. Okay, so that's kind of our lag, you know. So I'm not. Okay, this is our bullish lag. Okay, hopefully that is clear. So M15 is overall on the swing structure bullish in this case, but at the moment where price is breaking it here, creating new bearish substructure, you understand that on the M1 you can look here for shorts. You can look again here for shorts. The problem is just the more you go lower, the higher is the chance that price would just give you like a fake out like this, because it didn't mitigate it this supply zone, for instance. Then it's dropping lower, and this is why I highly don't recommend to just go on the continuation ones. It's just too tricky from my point of view sometimes. So you would just get not that high win rate. The highest win rates are always at the extremes. So from my point of view, if I understand this is the situation and I know we're just here, I'm interested to just look for the long here and probably looking for the short up there, and that's the only thing that I'm looking for. And yeah, that's it. Now here the same kind of thing. You expect price, just draw it cleaner. You know, you expect price to give you that one bullish break here in M15, and then you following M15 bullish order flow. So this is like the best thing that can happen to you, that you are on this side, but it will be super, you know, super bullish at that time. So it will be hard to get involved here in a clean trade many times. This is why it's difficult, still can be super difficult to get here involved in some proper trades. But more than likely you are here in a pullback. So pullback trades are cool as well, of course, but it's just can be tricky because sometimes they can just use this demand zone here and price from there would just fly all the way back up. So that's kind of your risk that you just need to take into account when you're trying to trade these options. So for pullbacks, it's just stupid sometimes because it will end up like this. So whenever you're pro trend, you just know, okay, I can expect to hit this because this is actually my target. You know, it's liquidity, and I need to expect that this is my protected one. Now that doesn't mean that price cannot just go through it. Of course it can, but the chances are just the way of how I illustrate it right now here are just higher, you know. So this is definitely super important topic, and I hope that you take your notes. I will send you this screen as well in the Discord. So cool. That's basically it right now, just the theory behind it. Okay, so you just follow the substructure, okay, because you can see the first that you have is the swing structure. Then the swing structure at the moment when, you know, it breaks structure and anything and it gets a swing structure, it will turn out into the pullback substructure, which is this, and then at some point the substructure will get back bullish. I mean, it doesn't need, I mean, look at this here, it's again bullish, so it's valid to look here for longs. Now that doesn't mean the price cannot go lower, and this is where you can make your failures, and this is why the extremes are always the best, because here you're at the extreme, so you know you should not expect price to drop down lower, because if it will do that, then this whole thing will get bearish swing structure, and then your whole bullish ID is just wrong. And situation like this can only happen if you expect it on the higher time frame as well. So that means that this supply zone that I marked up here is not an M15 supply zone only, it is also a 4-hour, 4-hour supply zone, because on a 4-hour supply zone you can expect that price will give you that. And ideally, whenever we're looking to get involved in any trades, ideally we have here at this top, we have London session, for instance, or Frankfurt open. The same here, New York here, for instance, or London here, Frankfurt here. So this is why we can time it. Now, whenever, for instance, we have here Frankfurt open, we just understand, okay, this could be easy liquidity. Then for me, it's clear, yeah, we need to go for a short, for instance, Then it's London, and I understand, okay, we need to go long. So this is kind of the way and how you need to use then our timing, by understanding the openings, because the openings will offer us pretty nice accuracy on our trades by just following the 1 minute substructure. And the best is, of course, also in M1 to follow the swing structure. So not only the substructure, because the substructure can trap you many times on the M1. So on the M1, I highly recommend the swing structure. But if you're at the extreme, you don't need to wait for that as well, as you've watched in the last Zoom call. So the last Zoom call that we made about this topic was super important, and hopefully you watched that one as well. Okay, so this is the theory. Let's get it with some nice examples now. Let's go on the M15. And on the M15, we have this situation currently. No water. Okay, cool. M15, we got this situation. You understand? Okay. Now our buyers early on, it just looked like a Wyckoff accumulation. This is why this ID kind of failed at the end. But yeah, cool. We just understand right now what price did here. We see here kind of bullish, but this could be our bearish swing structure. So it's not 100% clear here from my point of view how to approach this. So if you look now on the 4-hour, for instance, this whole market looked like this. You understand that you have here a BOS, which means this is bearish. This is your leg here. We got also here something that could be also a leg, so we just used the bigger one. But we understand here early on that we got the BOS. So you can see it's not an ideal situation right now to use the higher time frame into your favor. And this is why this situation is not clean, because you see on the higher time frame, like I explained, okay, we are approaching a supply zone, so we can expect that the M15 will shift. And then if M15 will not shift and it will just give us, the liquidity grab and stuff, then we know, oh yeah, no, it will not shift. Instead of it will just continue with that one continuation. So this was kind of the biggest things here. But we understand here also in the 4-hour, you got the BOS up. Then you got the BOS down here. Then after you got this BOS down, you view this as a supply. After you view this as a supply zone, you can see internally it gave you another BOS, which was valid here. So in fact, it broke this, but was only valid at the moment when we close with this candle here, which makes right now again this whole area here a valid supply zone. So you can grab like this, but let's check me out the M15 if we can spot here something. Yeah, well, this is right now that time here also not clear which is right now the real supply zone or so. You just understand in this case, which is cool, you understand you have this, which is your supply, because it broke structure to the downside. And on the M15, what you understand here is that the supply zone here is mitigated. Now here, this could be also a mitigation. This one here, okay, and you approach it like this, and you just expect only this one to be mitigation. But you can also expect, of course, yeah, okay, this is on the M15 my potential returning point. Okay, so you have also here more options because price is in this big consolidation, so this is what makes it at the end a little bit hard. Okay, anyway, we just understand at this point, okay, price could go potentially up higher. But look at this, which is more interesting, and this is what you need to keep notes on. You understand here, price is moving down and it's breaking here the structure. This is what we understand. You understand price is dropping. You understand here that price failed to go lower and it grabbed liquidity. So here you can see price only wicked below and it tapped here into this demand zone. So you have a demand zone and you got liquidity grab, and everything here looks like a Wyckoff accumulation thing. And you understand that you expect this one to get mitigated, so of course the extreme, and probably even moving up higher. We'll need to understand price action. If M1 will show us, okay, we will shift and we'll go for a shift, you know. So that's how we can approach that. So anyway, just by looking at this, everything screams bullish, bullish. Okay, so you go bullish, the bias. Then you are analyzing the substructure, and what you understand on the substructure is this: BOS. So it's a bullish substructure as well. Remember the example that I explained you earlier on. So you got this case this here is on the M15, your bullish leg. Okay, this is your valid bullish leg. So you can view it like this. You are in the demand zone. You have here nice liquidity. You have liquidity here as well, which is price giving you. You got perfect Wyckoff accumulation, and you got bullish substructure. So this is like the best things that you can get. Now, the last factor, I mean, yes, the only thing which speaks against you is the 4-hour supply zone. But also the 4-hour supply zone screams, hey, yo, I'm a supply zone. I want to see it getting mitigated. So this is also in this case bullish. And when you see so many factors like we have it right now, it's a clean idea to go bullish. So you just go right now and wait for our Frankfurt session. We analyze it then. So the last 15 minutes before, you understand, okay, I got here a demand zone. Okay. And I want to see price coming into this demand zone, giving me a mitigation, and then continue to go bullish. So I start to look on the M1. On the M1, I'm trying to look for a refined entry, which is in this case, this one up there, this one for instance, or it could be this one as well. The other ones are no demand zones. The other ones here are just pure liquidity. So from my point of view, this is really the last POY that I can expect for price to give me, and that's basically it. So I look here for price to come into this area at 8 o'clock. So 8 o'clock already opened up and it's bearish. It's still bearish. You can go bearish here from my point of view. It's valid to look for shorts so the price is tapping into this area here. And this is exactly what it's doing. Now how you could have been looking even for that short, it would be super possible because M1 is bearish. So you can look here in the 5 seconds for something. So from my point of view, you know, this is the M1 supply zone, and you just wait here for a reaction. You can see here is where price broke something. Now that doesn't need to be right now the real confirmation for you. So I would just say this is really a clean confirmation here. That is the BOS. So you expect price to come to the extreme. You just use 1 pip stop loss. and that could be your trade. So clean trade, you have this one extra inducement, and because you understand price has here a high chance to return, you're closing it. Now it's not an ideal setup. Why? Because it's not the direction where we are expecting price to go, but you could have been holding this setup for price to just run for a longer time period if you don't know where price should really be. Here the same kind of thing. You expect price to tap into it and to give you some sort of price action confirmation on the 5 seconds. In this case, it broke here above. Okay, so you can see BUS, BUS. You have your V shape. Okay, this is your V shape here. V shape means they just put a ton of liquidity in it and they will not use it. So for instance, you can use this one, which is also totally fine to use this one. You have here nice liquidity and you just expect price to tap into it. Here you can see it broke another structure. Now interesting is to see, okay, price even broke this. So you come now to the M1 to look what M1 did, and M1 in reality broke structure as well. So it's the real shift. So everything is just shifting right now. Here you can see that this is nice inducement for this demand zone. On the M1 you can spot here also this as the demand zone. This is your real demand zone. I mean, you could use the wicks as well, but in reality it's this one. So on the M1 I could even refine it more than on the 5 seconds in this case, because on the 5 seconds, you know, it's the whole demand range. Yeah, cool. Tapped into it, boom, price is moving. Now important is to see what price will do. Well, it now push up higher because the London session is going to kick in. So you're in already nice profits, okay, boom, and it's dropping already back down. Interesting is now to see it's still bullish. The M1 is still in the bullish swing structure, and right now you still have this demand zone here, okay, which is not tapped to the low, so it could still tap in one more time. It could also just tap on here, but this is not possible in this case. Why? Super easy, because you got bullish swing structure. If it would have been broken this, then this would be my extreme, and this is interesting for me. As long as price will not break the extreme, this one for me here could be still liquidity, because price don't want to mitigate this. In reality, it wants to mitigate still this zone. Okay, super important stuff what I'm explaining right now, guys. And this is what price is also doing, as you can see. So it's really tapped into it. It's pushing up higher. Let's just check if we can spot something on the 5 seconds down there. Actually not really much, so you just needed to really, in this case, just use the entry from the Frankfurt session, because the London is not offering right now something very clean. Okay, let's see if it just do something else. So yeah, you can see it's just moving up higher, so it has no intention to really come lower to offer you in the London session a clean opportunity for this trade. But yeah, this is where you should enter it anyway, and you expect price to go up higher, and that is at the end the whole trading ID. Now, as you can see, we tapped in the supply zone. Okay, we even wicked a little bit above, but let me just use this. Yeah, it's perfectly. Look at this. This is the way how you can interpret it. It's, you know, in this case, if you see like this, it's a small mitigation, so you can still expect price to tap here higher in it, and you can see also that this is liquidity. Specifically, this is the liquidity, because it's the BOS, but the BOS comes from here as well, which means this could be your lag, okay, and this is where price is not coming up higher, and this up there is the protected one, which protects this one, and this is the bearish. So it's cool, because when price comes into it here, it's around 11 o'clock, which brings me to the second time, to the third time where it's interesting for us to get involved into this trade. In this case, as you can see, that will be the first one right up there, right down there. So like always, 1 pip. 1 pip is what I'm using every single time. This is I'm planning it. So on the Frankfurt session, the first trade. Missed that one, you took the London session as well, or you closed it already at the top because you're not feeling comfortable with it and you just understand it can still go up higher. So 2 times 40 are possible. You can go even higher, guys. You can really go up higher. So please close at the next area where it just makes sense the price will stop, which would be here, specifically here, or close at the supply zone. I mean, this looks like equal lows at the top, so it's cool. And here on the M1 you can see first charge indication, but if you go on the 5 seconds, you will see here also some nice confirmation for everything. I mean, you can see here price broke this one, and here we can see another textbook 5-second entry model. Why? Because look at this, price gave you extra inducement right before it tapped into the supply zone. So important for us right now, of course, is also to identify here on the M1 something, to identify specifically this, this supply zone here, okay? Because this is where in reality the market came to mitigate that one as well. It came to use this liquidity, and on the 5 seconds you want to see price tapping into M1 PY, otherwise it's easily fake out like this. So people try to look here, okay, yeah, it broke structure, I need to go here for a short. This is stupid because price didn't tap into M1. So you want to see price tapping into M1. This is where it's doing up there, and because of this movement, particular movement, took out these, it gave you BOS from there, means that this is trying to go short, and means, yeah, this is your supply zone. Putting it again at 1 pip stop. Go for a 1 to 20 at least 120, and you're cool. And you're cool, guys. Boom, or even more, you know. So it really depends on how you would like to set up your targets at the end. In this case, once you understand this, on the M15 we're still bullish, but we're at the top of this M15 where it's in the bearish range, you know. Here the same game is different. This is your bearish range, okay, BOS. This is your range, this is your protected one, so both are cool. And you're in a liquidity pool, so you are in an M1 supply zone as well, you are in an M15 supply zone as well, you have liquidity for it. It's valid on the M1 POY to look on a 5 seconds BOS and to enter that market. That's it. It's nothing more, guys. So that was hopefully a nice example to tell you right now also kind of the timing, you know. So important is that this trade, when you're looking for, is around these hours of 11, 12 o'clock. So it should not be the New York session, but it should not be the London session as well, you know. So I mean, it's in the London session, but what I mean is should not be at New York Open and not a London Open, you know. This is the time exactly between London and New York, and it's offering also pretty awesome trades. But you need to understand the whole structure and everything at that time to really go for a nice trade up down there. And you expect, you know, the mitigation of this demand zone, or probably even go lower, you know. It really depends many factors then as well. Yeah, or it's just dropping like crazy. Well, cool. So that was a nice example. Want to go right now over the outlook for tomorrow. And here is the interesting part, guys. You understand here from the higher time frame, you understand here from the monthly, from the weekly, that we are really at the lowest low possible. We are at this demand zone. Price really just came super low. If I'm drawing this up, you know, it should not break that from my point of view. If it will break that, then we have a high chance to see price coming somewhere here. That will be kind of very messy price action. I mean, it could, you know, it really could. I just don't know if it will really do it. I just expect right now, to be honest, price to continue to go bullish. Yeah, weekly closed again bearish, closed below everything, closed below this. But that means also at the same time, okay, we finally closed below this. You know, that's what we closed below is, yeah, we have right now liquidity to bring the price up higher, and what I want to see is reality, seeing price coming up here or even here. Okay, that's what I want to see, and that's what I expect, to be honest. So right now, because we've been really at the lowest low possible, daily is bearish for sure, so we want to see price coming to the supply zone. 4 hour, the same thing, we want to see price coming up here. Yeah, so it's, you know, it's still bearish 4 hour everything, you know, so it's currently, you know, rejecting here this supply zone as well. You know, so we should actually follow the bearish trend, but we just don't know where it wants to go. M15, what it did right now as well is, in reality, liquidity grab. This liquidity grab leaded to a BOS here, which makes right now the M15 back bullish. Still, swing structure is because if we didn't broke here below, let me check a little bit. It's difficult in this case to determine what the real swing structure is. If it's right now this one here, what we can spot on the M1, because in reality on the M15, what we did is we broke this. We broke this, and that means on M15 we are already potentially bullish, because this is right now our range where we are currently, you know, so we could come down lower to mitigate this and to go bullish from here. Okay, so as I said, it's not clean, you know, this will be the liquidity here for that one to work out. It's not clean for me right now, the situation. Still, it's not too clean. It just looks like it's bullish, but you know, M1 in this the H1 is totally bearish still. It's just a substructure on the H1 which is bullish, but still the outcome could be bearish. The 4 hour is bearish, the daily is bearish, the weekly is bearish, everything is bearish right now. Just M15 looks like it's shifting, and I'm just following an M15 because M15 will be one of the first ones which will change the whole trend, and I just expect price to return back to this area here, because here is where I want to see EURUSD coming very soon, because you just understand, based on this whole thing, now you want to see here range mitigation, because this is a big range where price should come to mitigate, and then to decide from here, will it go lower or will it come here like this to finally mitigate this, because I want to see the range mitigation of this whole thing here as well, you know, and we did that. But what it did here is just creating extra liquidity, dropping down, and then could be like a big whack of accumulation, you know, that could be the start of one of the biggest accumulation phases. Just doesn't look like that right now, but you will see it could look like, because price is right now at an interesting point to reverse from every perspective. So let's see, guys. So I'm super curious. I will update you in the morning, but as I said, the thing that I explained you early on at the beginning of the video with that one M15, how it should look like, the substructure and stuff, this is what you need to follow. And that's it, guys. And then you know exactly what to do. Frankfurt London session, it's enough. New York, you know, New York, I'm working currently on something new. It's not fully backtested, you know, I'm not sure yet. So I don't want to present it to you yet, but it will come very soon, a New York strategy, because New York, I'm super shit, as you've seen. Not good at New York. Probably whenever I took great trades in New York, it wasn't because of I understood how the opening was. I just understood the overall situation. This is why I took real entries. This is what my conclusion is currently like. So I'm just trying to find something also in the opening, something interesting which can make us there also the life a little bit easier. But to be honest, I'm more than happy with the London and Frankfurt session, because I can hit there on a daily basis almost 1 to 20, and that's for me already more than enough. So you know, I'm still super motivated to figure out what New York session will do as well. But yeah, let's see, guys. So I wish you a nice Sunday, and hopefully everybody's motivated for tomorrow. I will send out through the week when we will make our Zoom calls, but more than likely will be on Tuesday and on Thursday again. And yeah, wish you successful trading. When there are any questions, feel free to check it out in the hashtag question section in the Discord. And yeah, can also hit me up on private if there is something. And yeah, I would say bye bye guys.